Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Dave asked, are my methods best used in position, swing, day trading, scalping trading, or all of the above? And I use them in every single time frame. I trade everything from things that I'm holding for a couple of years to things that I'm only holding a couple of minutes. Actually, there's stuff I've only held for like 30 seconds or so, just scalping, and it's all based upon the exact same strategies. It literally does not matter what time frame you're trading on or what security you're trading on. The only difference is that some securities, they're going to be so thin that you can't really see waves of back and forth action. If we go to look at that 1 minute of that YUK again, for example, clear back at the end here, you can see that there's a lot choppier action, and it can be more difficult, especially for newer traders, to really see the waves of back and forth momentum. One way that you can clarify this a lot is if you use a tick chart, because that will show you a tick chart that's usually a line chart. That will show you the back and forth waves of momentum a lot better than necessarily a candlestick chart or a bar chart like shown here will do. So if you do that, then that can clarify that action and kind of help you with timing things when you're dealing with thinner securities or scalping securities. You can trade the thin securities, of course, on a position trade, but in order to see the momentum move, you might have to use even tick charts for that as well. So that's a great way to kind of enhance how you see things. In the EUI example, where on B would you enter short and where would you put your stop? Okay, I believe they're referring to the current pattern that's attempting to develop right now, where we have this initial move and then the shift here. The entry trigger on this would be when this lower channel breaks. That would trigger it. And usually on this particular setup, my stop is then above whatever the high of this channel is when that trigger occurs. So it might be a slightly higher high still. We might have a high into like 78, for example. But whatever that high is, just when that trigger occurs, that breakdown, that's what I'm going to use as my stop. So if we look at this action back in here at this first level, I wish I could zoom this, but let me try to show you a little bit better. The trigger would basically be right here, just above 78, and the stop would have been right here. It's kind of hard to see on this, guys, so hopefully you can. So we would be looking probably at a trigger that would be in this zone, because once this breaks higher, you're going to want a little bit of a confirmation of that, and then the stop will be whatever it is above the high of this channel when that breaks lower. So that will be the trigger and the stop level on that particular strategy, particular pattern that's forming here. Looking at support levels, basically levels to display for target, first of all, we have a strong support level right in here. You're also going to have the equal move support, which will be probably right about in that same zone of 70-ish. So that would be an initial target level where you're going to see some initial support, but it would then have the potential that it could come back all the way back into this zone here that develops a third wave of downside. So those would be the two main target zones that I would be looking for. And it's just going to depend, again, upon what the pace or the momentum is. If the pace is more gradual coming out of this, well, then it's probably not going to hit those target levels, and you'll want to adjust a trailing stop to whatever above that channel ends up being. At what point would I have a break? A low of the last 3 days, channel break, etc. Usually what I will do is, this is a daily chart, so I'll drop down and look at an intraday chart. And you know how we're looking at like how things will hug support levels or that type of thing often before channel breaks? Well, we have this uptrend channel here. So I would be dropping down and using probably about a 30 or a 60-minute chart to look for timing and entry and see if you get any change of pace or momentum on that. And then I use that channel break to give me a trigger. Usually what I'll do for the channel break is I'll want it to break under the last 2 or 3 bars within that channel to just kind of add that extra confirmation. But if you have that momentum shift, it's going to be much higher probability than if you don't have a momentum shift and you're trying to take that channel break. Question is, measured moves considered an indicator? You know, in terms of like what technical analysis refers to as an indicator, no. But if you're looking at something that's going to give you an indication of where price action is likely to stall or cease movement and reverse, then yeah, it's going to give you an indication of that. So in like the general sense of the word indicator, then it would be a yes, but not in terms of how technical analysis refers to indicators.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.